But at the end of the day, supply and demand
100%.
is the most important thing, and particularly in a convex instrument like an option, I think.
That's exactly right.
I think, I focus a lot on dealer positioning. I know you do as well. I think it's interesting if you walk through the history of these kind of the correlation of vol relative to declines. It's almost like a sine curve. And what do I mean? If we go back to August 15, yuan devaluation, you probably remember this, right? Massive vol event, right? Streams kind of went black. It wasn't that big a move. It was the biggest move that we had since 2009. But I think it was an 8-9% decline, right? Yeah, but it happened quick. It was a matter of a couple days. And that vol exploded, right? So what happened 6 months later? Everybody's always fighting the last war.
Bingo.
All the short vol entities got washed out to sea. The long vol traders all got sort of taken on flows, and they had made a bunch of money, so they had more to invest. February 16, right? Oil goes to 20. High yield starts blowing out, and everybody's like, here it is. It's coming back.
And if they look at vol, right? Let's sort it up.
And I think the important part there is not just that the implied vol doesn't work, but reflexively, it drives less realized vol. That decline was much slower, stair steps, but also very interestingly, it was a bigger decline. So instead of the 8-9%, we got 12% because hedges were not working.
Yeah, I think that's exactly right.
Right. And then we can go right back, like 16, and what happens? We go through 17, vol selling. Everybody's like, why would I own puts? Because in Feb 16, the biggest decline since 2009, it doesn't work.
Totally.
So vol selling comes in, XIV gets shorted.
Yep.
Volpocalypse.
Kaboom, right?
Kaboom.
It's very cyclical because exactly to your point, it's driven by positioning.
Right.
And positioning is very heavily driven by what just happened last time, and everybody's got a short memory, right? So it's like, you have a huge blowout of short vol positioning, and you have big inflows into tail hedges, big inflows into long vol ETFs from retail.
Right.
And then you get the unsurprising underperformance of like long vol positions. They bleed to death. Short vol's performing really well. Everybody's piling in. A couple years later, like now we're massively crowded short again, and we repeat.
Totally. Actually, if you just continue that, just to finish the thought here, because I want to illustrate how sinusoidal it is. October, November, December 2018, 19% decline, right? Like the biggest by far again since 2009.
Yeah, and December just every day 1 or 2% down, 1 or 2% down, no realized vol.
Awful. That was like so painful.
Yeah, exactly.
COVID, massive vol explosion again, 22 then.
Slow grind down.
And so the question now this leads to, right, is we just had 22, and then we had a vol event in Liberation Day, a pretty big one, right? Are we going to get the vol compression decline? And again, that doesn't mean it's less of a decline. Doesn't mean decline's not coming, but it could be an even bigger decline in theory, right? With less, like a little bit slower.